You guys got this right. Stay away from China for now. What will be the alternatives?
I'm sorry, can you repeat that?
What's the alternative?
There are good alternatives in Asia. One would be India, which is coming out of a very severe pandemic, and we think it'll be seeing a quite rapid economic recovery as the pandemic eases. Another option is Singapore, where investors are heavily underweight. It's another fast recovery story for this year. It had a deep downturn last year, but the pandemic isn't much of an issue for it anymore, and it has a tech heavy tech exposure on the export side. Korea, we like DRAM and memory, we like autos, we like the banks. So those are three markets that you can look at as alternatives to China, and they're pretty sizable markets as well.
So you're underweight China. That doesn't mean you don't like anything within the Chinese market then. Dan, take us through some of the names that you might like within that Chinese market.
Well, I think you don't want to completely abandon the tech plus sectors. You just need to be highly selective. You need to look at areas that maybe might not be so sensitive to the regulatory crackdown. One option would be, say, in food delivery. Also, you might see some opportunities in old economy plays once the policy stance in China improves. We have seen a movement from a tightening policy to a more neutral stance. I think once we move to a more assertive stance to stimulate the economy, then you could see some of these old economy sectors like banks start to perform.
Dan, yeah, but get to banks in a second, but before COVID, with the trade war between the US and China, we talked about supply rejigging, supply chains being rejigged, and that certainly continued through COVID. You got that in your investment philosophy too?
Well, I think that the story, that the jury is still out as far as how much supply chains will be reorienting themselves geographically. Some trends that were already present before COVID are more confirmed than they were ever before. That would be, say, the movement of cell phone production to Vietnam and India in particular. But I think that the worst fears as far as multinationals moving out of China and en masse, that isn't going to happen. China is still going to remain an integral part of global and Asian supply chains.
Dan, I want to get back to what you said about banks and looking at banks in this region, which have really lagged their counterparts elsewhere. They obviously must have lagged for a reason, but what makes them play catch-up?
Well, valuation is the number one story. The valuation gap between Asian banks and the rest of Asia on the one hand, and Asian banks and global banks, and particularly US banks on the other hand, are quite wide, unusually wide. Another factor is that these banks tend to be later cycle performers. Typically what you see in an upcycle is that the commodities, the energy stocks, the materials stocks, tend to perform most early in a cycle, and then the banks tend to kick in a bit later. And I think we're at that moment in time where the banks are about to start outperforming.
And Dan, Indonesia, you have a call on that, which is quite contrarian right now, given the COVID situation. What do you think is going to get investors back into this market?
It's a very cheap market. It's a market that typically performs very well when commodity pricing is strong. The currency looks very undervalued. If you look at India as a template, India began to perform well even before the infections peaked. And Indonesia, I don't think we're that far away from when the infections start to peak. I think a lot of the population is already immune to a certain degree to the virus.